Hello and welcome guys to today's market recap. I didn't took a trade. I already told you that I'm going to take 2 days off. 2 days off of not willing to take a trade, but I did the analysis regardless, and I did the backtesting regardless, and I did all the work, but without taking a trade and without looking to take a trade. But I did the analysis. So the main trade that I was willing to take is one on GBP USD, and I didn't take trade, and I'm glad that I didn't take trade, even though my bias and my analysis was right. But thankfully I didn't took the trade. I'm going to show you the pre-market analysis and the post-market analysis and the after-market analysis. So hold on, not this, hold on. This was on the last day. This was it. So GBP USD, I was willing to for market to go long. I started analyzing, but I knew that there is going to be so much manipulation in the market, especially with the high impact news that we have, the Fomc, the rate cuts, or the Federal Reserve. Hold on, let me show you. So on Wednesday, so we had BOG press conference, federal funds rate, FOMC economic projections, and FOMC statement, FOMC press conference. So that is enough for me to not even look at the chart even, but I did the analysis regardless. So this on GBP USD, I was willing to take longs, and hold on, and that happened perfectly. I'm going to explain everything and what is my thoughts on the other pairs, and I'm going to show you the backtesting strategy. So let's go straight into today's video. Please don't forget to like. If you have anything in the comments, please type it out. I will reply you within an hour, bro. don't even hesitate of asking anything. So let's go straight into the video. On Asian session, we came up. Hold on. So we took out this liquidity first on yesterday. Then on Asian session open, we came down. I was willing to fill up this imbalance even more on the 4 hour. The daily was forming. There is no. I thought there was the imbalance on the daily. So these were the previous daily highs, and those are the previous daily lows. And with the 4 hour imbalance that is right here, and the previous daily low right here, and the market is overall overbought, I think it's the time for a retracement. So the retracement happened in the Asian session, and as I said before, I will not take a retracement ever again. So what is the current overall trend? That's right, it is bullish. What happened? We retrace it into an order block, an imbalance, and right when London session opened, kept consolidating for a little bit, and then we came down. We took out Asian session lows. We made a liquidity sweep off of it. We made the bullish SMT, but we didn't took out the previous daily lows. But it was okay. We did the breakout structure on the hourly. So hold on. We did break a structure on the hourly. Then there wasn't much volume, and the sweep of liquidity that happened before the New York session opened wasn't like the best liquidity sweep. We had even relative equal lows at this conditions. So that wasn't enough for me. So I said we need more leg down. There's more liquidity to get swept. Those are relative equal lows, especially with these lows and these lows. These lows need to be taken, and probably we're going to take out these lows, but we didn't took out them. So when New York session opened, we came down, we took out previous London session lows right here. We took out the previous London session lows. So now we have Asian session lows took out, London session lows took out, and then I was willing to take longs. So we have this 15-minute bearish fair value gap that I wanted to get invalidated. So we respected it right here. Then we came down to fill up the order block right here, but then we make the break of structure right here, and we inverse this 15-minute gap. That was enough for me to say market has had shifted structure. So I scaled down to the 5-minute. Hold on, we scaled down to the 5-minute. This was the retracement. Hold on, right here we did the market structure shift, and we were left with this 5-minute bullish fair value gap. Price reversed into the gap, into equilibrium zone, also from these lows up to these highs, or these highs, same exact thing. We still fill up the equilibrium. We filled up this breaker block right here. I'm going to clear up everything so you can see properly. Those are bullshit. We invalidated the bullish fair value, the bearish fair value gap. We retraced into equilibrium, breaker block, and a fair value gap. And from that, I only willing to see a break of structure off of the 5-minute, and then look for 1-minute entry. So I'll scale down to the 1-minute time frame. After retracement into the fair value gap and the breaker block on the 5-minute, we came up, we ran through this bearish fair value gaps, these two bearish fair value gaps. So we inversed them, we created this 1-minute bullish fair value gap, and then after we did the break of structure on the 1-minute, I usually look for a 5-minute retracement. I do not take trade off of that. I wait for a retracement. That happened right here. This is the 5-minute retracement. Then whenever we see break of structure on the 1-minute after the 5-minute retracement, I enter like immediately. And what we did, this is the 5-minute retracement, boom, 1-minute inverse of this gap. We broke above this 79% zone of the Fibonacci extension, and we did close above this structure. Boom, enter off of that. Hold on. Take profits above at Asian session highs or at these highs as you want. These are such two strong draws on liquidity. And your stop loss, you may set it up right here. That will give you pretty much 1 to 2 risk to reward. But if you set it right here, that will give you a much lower risk to reward, but you're going to be more safe on the trade. Why? Because whenever the stop loss is below the liquidity sweep, more likely price, whenever it hits, it goes down more, that means the trade is overall invalidated. There is no trade set up to potentially go higher or anything. But for me, I would set my stop loss at these lows, or even these lows, or even these lows on the breaker block. That will give me a 1 2 3 rest to reward, but psych, we got a manipulation as we expected from an FOMC day and a volatile day such as Federal Reserve rates decision and FOMC statement, press conference, and everything. So that's why I didn't trade this day, and I also, of the losing streak conditions, that I told myself that I'm not going to take a trade until I rewire my brain and I fully go up to my potential to go into a winning streak. I'm so confident about it. The winning streak is going to hit hard, and hey man, expect some fucking high fucking percentages, especially with some high risk to reward like this. I'll probably pass the account within a week. So with that being said, this is the market recap of what is my thought processes on this trade, all of this trade. I didn't took it because it wasn't the best trade. So with that being said, thank you guys for watching. Catch you guys up tomorrow. Peace out.